Hey traders, it's Victoria from TRADEPRO Academy. In today's video, I'm going to be presenting a market profile trading strategy to understand how to better intraday trade, how to find trends and how to find ranges and what kind of day might shape up just using the market profile and how to find trades using just that market profile. So if you guys are excited about this strategy, stay tuned and we're going to be breaking it down on the S&P 500 and the NASDAQ futures, and I'll see you guys after this intro. Hello traders. So what I'm going to be breaking down today is how we can use the market profile to intraday trade, how we can use this as a tool that we can add to our intraday trading repertoire and our strategy, but how we can identify if the market is expected to trend or fail using a market profile to keep us on side of things. Now, first and foremost, one of the main things that I'm going to talk about here, right, you can see this is Sierra charts. If you guys want our chart book, check the link down below in our bio. You can join our free Discord where the chart book is available to everyone, right? So you can get all these charts in there. And this is Sierra charts with a volume profile, market profile complex, right? Explaining first and foremost what everything is. Here on the right-hand side, we have a 100-day volume profile. Here we have a weekly volume profile. And each one of these individual sessions, you can see there's a different color background. This is the regular trading hour session, and this is the ETH with the lighter background. Each one of these sessions has a volume profile that's attached to the market profile. So our point of interest today is going to be these market profiles, specifically on the RTH session, since we're going to be using these to intraday trade. Now, I've made videos on the market profile before, so I'm not necessarily going to start off with the core basics, but we'll do a quick little intro on the market profile. First and foremost, what is the market profile? The market profile is a very similar construct to the volume profile in that, right, it creates some kind of distribution here, right, some kind of normal distribution that's representative of time. So meaning that it's divvied up into 30-minute periods or intervals. And whenever price trades within that 30-minute interval, it'll print one of these letters spanning from A to O, depending on how far along you have this, because I just cut it off at 5 p.m. Eastern on a regular trading hour session. It might be O to M, or sorry, A to M, right? So each one of these periods is a 30-minute block, right? A, B, C, all the way down to generally M if you use a cash close. And it starts at 9:30 to 10, right? 10 a.m. Eastern to 10:30, and then 10:30 to 11, and then so on and so forth, each 30-minute interval, meaning that every time price trades at a level within this 30 minutes, it's going to print that A, and so on and so forth, and is generally going to create a type of profile, right? It's going to look not necessarily similar to a volume profile because it's more time-based, but it's going to create some kind of a distribution, normal distribution. These 30-minute intervals is very similar to having 30-minute candles, right? And one of the tricks that I like on Sierra charts, if I right-click here on this chart and I go letters, blocks in their own columnar profiles, what it's going to do is split up this profile individually. Every single period acts as its own area, right? As its own type of 30-minute candle, realistically. So when we look at this, there are pieces of the market profile that we want to attack first, right? The main thing that we have to understand is you can see this thick white line. This is what we call the initial balance, or the IB. This is the first hour of the regular trading hours session, right? So that means that it's comprised of the combination of A and B period, meaning the highs and the lows of the first hour A and B period create what we call the initial balance. And this is mainly what I'm going to be focused on and trading around the initial balance to develop a strategy / system or something added to our trading strategy using the market profile. So when we're looking at this, right, we want to ask ourselves, what are the general uses of the market profile? The market profile, the main use is it helps us understand intraday trends, whether it's trending to the upside, to the downside, or if it's going to range. And that's going to be the main focus of this video. We're going to be using the IB and different periods around it to identify what kind of potential intraday trend can we be faced with. And there are pretty high probabilities that this is going to tell us, right, either up, down, or sideways, right? About 70 to 80% probability that this is going to dictate our movement for the day, just using the first few periods. So there are a few things to understand before we can identify these concepts realistically. And these are three different things, right? First and foremost, what we want to see is the trading around the IB. So we're going to be looking at the market in terms of every period outside of the IB. So the IB is A and B period, meaning that we're not necessarily focused too much on A and B period. One of the main focuses on A and B period is if B period will close within A period, which dictates that there's most likely not going to be too much movement on the day. So for example, let's say this is all of A period, and B period, it opens and closes within it. So it's smaller than A period all the way inside into A period. If this occurs, we're generally not going to see too much market movement throughout the day. The next part is we're going to be talking about excess moves. So when we look at the IB and the market profile, the first letter that has the possibility to create an excess move is going to be C period and then into the end of the day. So that means I want to focus on the periods that are outside of the IB to dictate if there's going to be some kind of excess period or not, right? So one, A period, if B period closes within. Rule number two, if we get a move outside of the IB from C period and beyond, right? D, E, F, right? These are all part of that kind of ensemble. If we get a move outside of the IB, generally speaking, in one of the earlier periods, right? Some of the sooner periods, so that we're not necessarily trading the last hour or two of the trading session. So let's focus on like C all the way to F. If one of these periods moves outside of the IB and it fails, right, it makes an excess move, but it fails to actually close outside of the IB, then we're most likely going to get a failure and an acceptance targeting the other side of that IB. There's going to be some kind of reversal back into the balance. So if we take a look at this, rule number two here, the red letters of the periods are the closes of those periods. So we have D period here and E period. The top of the IB is right here. So we get a failure to actually continue this excess move by closing back within the IB on both these periods, meaning that I'm going to be looking for an area that I can short to target all the way back down into the bottom of the IB, which is one of the main trades that we talked about today and took today, right? If we take a look at that, it's right over here, right? I'm just taking a trade on the ES and the NASDAQ. I just want my stops above the 31 on the ES into these areas, and we can look for that short down towards the bottom band of the IB. So that's rule number two that I like to follow, so we can understand that there's going to be some kind of balance period based on the market profile. Rule number three, what happens if we close outside of the IB on one of these following periods? Right, we can take a look at how that transpires generally in the past. So I'm looking at the regular trading hour session. Now, rule number two, there's about a 70 to 80% chance if we get an excess move like this, right? A 70 to 80% chance that if we get an excess move that fails to close above area of the IB, meaning the other side of the IB, right? There's a pretty good chance that you might get a little move, but a 70 to 80% chance we revisit that area. It's the same thing, about a 70 to 80% chance. What will happen if we close a period outside of the IB? So you can see here in this day, we get an excess move on C and we close back within. So we could look for a potential move, right, to target this area, the top of the IB. It doesn't necessarily happen, but we get a decent move that spans about 10 points on the S&P. Now you can see D period over here, right? This is one of the cases where we don't necessarily get that move. And then D period, what does D period do? D period closes well below the IB, meaning that when I look at this, there's a very high likelihood, 70 to 80% chance, we're going to see an extended trend move in the direction of the IB excess acceptance. And I want to short back into an area that makes sense, right? Around the IB low. I'm looking at multiple other distributions, right? Other volume aspects. And that's going to give us the opportunity to find a trend move, right? Or potentially a trend day. So ideally, both of these rules, they happen a little sooner after the IB actually gets created. Because, for example, if it happens in like K or L period, you're fighting with about like an hour left in the market close. So I don't really want to start looking for these excess trend moves after that. So I can look at multiple different days and we can get the same argument based on this breakdown. So here, C period close outside, D period pulls back a little, and we get this strong excess move to the downside. Try it out for yourselves. Go through multiple different days and break this down. So I use those two main principal rules to help me understand if I'm going to trade more range or trade more of a trend based on the market profile. Now, there's another thing that we have in terms of the market profile, and that's what we call failed auctions. A failed auction is generally known as a poor high or a poor low, which is created with two or more periods, right, that have the exact same bottom or the exact same top. For example, over here, we have the exact same lows, and this dotted dashed line has created a poor low. Generally, auctions get finished on a diagonal, so if we have two complete auctions or more that just have the same highs and have the same lows, we create a failed auction. A failed auction suggests that there's going to be a reversal in price from that move where we can capitulate on a possible trend or a trade, right? Maybe not a trend move, but a trade in itself. Now, these poor auctions, right, failed auctions, poor highs, poor lows, once they get created and price actually close with those creations, you generally have a move to the opposite side the following day / session. So if you take a look at this, we have a poor high that was created on an overnight session, and the next day we have a very strong reversal to the downside. Generally, these poor auctions get retested. These poor highs and poor lows get retested between 1 and 2 weeks of time. So if we use these three simple concepts, right, we can use the market profile to intraday trade and add it to a repertoire of day trading strategies, right? Something to add in terms of the auctions and auction market theory, something that I use on a daily basis. So a quick review. Number one, if we get a failed excess move above or below and can't close on the IB, we're most likely going to reverse and look for the other side of the IB. Number two, right, if we get an excess move that actually close outside of the IB, there's a high probability you're going to see a trend move in that direction. And then finally, if we're looking at the creation of poor lows or poor highs or these failed auctions, you're going to see a reversal and a potential reversal for the following day should that close that way. And right, our most forgotten rule, right, if we're looking at the IB, if B period does close with an A period, we're most likely going to see, what are we going to see? Probably just a choppy, crappy day trading day. So with that being said, I hope you guys enjoyed this video. Use these concepts, break them down, review them, backtest them, and maybe you can apply them to your trading system and strategy. So if you got more questions, drop comments down below, and we'll see you guys in our next video.